going to be talking about how the Forex market moves. So basically we have three types of markets. So we have the uptrend, which is also known as the bullish trend. So in this market, traders are only supposed to place buys. And then we have a downtrend, and in this downtrend, you're only supposed to place sells. It's also known as the bearish market. And then we have a ranging market, and in this market you place both buys and sells, and I'll explain. Let me quickly erase, and then we can begin. So the first market is the uptrend. So in an uptrend, this is how the market moves. So that is the uptrend. That is how the market moves in an uptrend. Right there. So we have a market like that, and then we have to name the structure. So this is known as the higher high. In an uptrend, the market forms the higher highs, higher lows, we have the higher low, we have the higher high there, and then we have a higher high, higher high, higher low, higher high, and higher low. So in the first scenario, sometimes the market moves really good, such that there are not a lot of manipulations, but most of the time the market is not as clear. So sometimes this is how it moves most of the time. So you mark your structures. That is your higher high, and then we have our higher low. So your higher high, and then you have the higher high there. That is your higher high, and then we have our higher lows, higher lows, higher high, and higher lows. Yes, so that is how the market moves. So where you place your entries, it's at the higher high. So that is where you place your buys. Buys are always placed at, you always place your buys at the higher lows. Higher lows, that is where we place our buys. Higher lows, higher lows, that is where you place your buys there. So in this market, we are only placing buys in this kind of market. This is an uptrend. And then we have what we call the BOS, short for the break of structure. That is what we call the break of structure. Yes, so this is known as the higher high, and then This is the retracement leg. This is the retracement. So price goes and forms a high and then comes back to a higher low. You place your buy there. Price goes and forms a higher high and then comes back to a higher low. You place a buy and then goes to the higher high and then retracement and then impulse, retracement, impulse, like that. And then you now have to mark the break of structures. So this is where our strategy is built upon. Marking of break of structures. So you are in an uptrend as long as price is breaking these highs. This is what we call the break of structure. As long as price is breaking structures to the upside, then that uptrend is still valid. As long as price is breaking structures to the upside, the uptrend is still valid. Like that. Break of structure to the upside. That is how we mark our break of structures in an uptrend. And then we have a scenario where we have a lot of highs. So you have that high and then this high and then that high. So you always mark the highest high. So the highest high, that is the one we mark as our break of structure. Like that. That is the highest high. That is the one you mark as your break of structure. Highest high. That is the one you mark as your break of structure. For as long as the market is breaking the highs in an uptrend, then price is in an uptrend and you place buys at the higher lows. And then let's move to the next market condition, which is a downtrend. Which is a downtrend. So in a downtrend, in this market, we only place sells because the price is trending downwards. So in this market, you are only supposed to place sells. Yes. So in a downtrend, we have what we call the lower lows. These are the lower lows. Lower low. And then we have the lower highs. And then we have the lower highs. And then we have the lower lows there. The lower lows. And then we have the lower highs. we have lower highs. So in this market, you are only supposed to place sells because the market is trending downwards. So you become a seller in this market. You become a seller. And in a selling market, we place our entries at entries we sell at the lower highs. Lower highs, that is where you sell. In a downtrend, we sell at the lower highs. At the lower highs like that. So price is coming down. That is a impulse move, correction or retracement, and then sell, and then it forms a low here, the impulse move or the retracement move, and then it moves down. This is the impulse, and then the correction move, and then it moves down like that. This is impulse, correction, correction or retracement, impulse, correction or retracement, impulse, correction or retracement. That is how the market moves in a downtrend. So the market basically moves in a zigzag. So there's no market where you will find just the price moving in a straight line. No, it does not work like that. The market moves in zigzag. Like that. And then to mark the break of structures in a downtrend, so you need to mark when the price breaks these lower lows. The lower lows, that is your break of structure. When price breaks a low, we call it a break of structure. That low, when price breaks it, we call that a break of structure. Like that. We call that the break of structure. And then this side, sometimes you'll have a lot of lows, like that is a low, that is a low, that is a low. So you always have to mark the latest low, which is that one, the most recent low. That one, that's the one you mark as your break of structure. Price is breaking a low, we mark that as our break of structure. We have a low there broken, we mark that as our break of structure. Another low broken, we mark that as our break of structure. Now, for as long as the price is breaking these lows, then we are in a downtrend. Are we together, traders? As long as price is breaking these lows, then we are in a downtrend. I hope we are taking down notes, traders. Take down the notes and then study the structures, because this is the basic of Forex trading. You need to understand how the market moves for you to be able to trade. And then the last market condition is a ranging market. We have a ranging market. So in this market, we basically have two levels that the price is bouncing off at. So we have the equal highs. So we have equal highs there. This one just becomes the high because they are at the same level. So they are no longer higher highs or higher lows. They just become highs. because they are at the same level. And then we have lows at this level. We have lows, and then this area at the top, that is what we call our resistance level. That is what we call our resistance and then down here the low, this is what we call our support. Now there are some markets which are like ranges for years, so you need to know how to trade them. So at the lows here, at our support, this is where you place your buys at the support level. That is what I meant by both. You place buys at the support level, and then you place sells at the resistance level. You only place sells like that. But for me, I do not like trading ranging markets, and I advise you as traders to always wait for a breakout. Always wait for a breakout before you trade, because you never know. Most of the time, price does not respect these levels. Price does not respect the levels. Sometimes it might move and then you think it will touch into that high, but it might end up just touching there and then coming back to this support level. So if we have a ranging market, it is always advisable to wait for a breakout. Wait for a breakout, always a breakout to the upside for price to start forming higher highs and higher lows, or wait for a breakout to the downside for price to start forming lower lows and lower highs before you can trade. So the best markets to trade are trending markets, which is the uptrend and the downtrend. Yes, so now that we know how the market moves, let us go to the charts and practice how to mark the break of structures. So for those ones, using MT5, so this is how it looks like. And then if you want to add instruments to trade, always press Control R on your laptop, and then you get a lot of symbols that you can choose from to trade. But for me, I've only decided to stick to gold, VIX 75 and VIX 25, because these are the indices that works very well with my strategy. And as a beginner trader, I don't need to trade a lot of instruments. Just stick to one or two. It's enough. Yeah, so that is how you control you. That is how you check. That is how you check. And then if you want to add the symbol, you basically have to go to any symbol, and then you click on the symbol, and then click on show, and then say okay. And then you have to go to that button, to that drop down, which say new chart, and then the symbol that you selected previously will show up here. Okay, let's open gold. Let's open gold and mark the structures. And also traders, on the time frames, you only need 4 time frames that I use. So you need the daily time frame, the 4-hour time frame, and the 1 hour in the M30. And then for the time frames, you have to go to the D1, and then right click, and then you say customize, and then you get a lot of time frames that you can choose, and you can select. You can choose to remove the 4 hours or choose to add. That is how you add, and then you can shift the time frame up or down. up or down. Yes, like that. So when you open a chart, it looks like that. We always start on the daily time frame. We always start marking our structures on the daily time frame. So you go to the daily time frame, and then when you first open the chart, you need to right click, and then you remove the grid. Right click again, and then you remove them. Trade history, remove trade history, right click, and then remove the tick volumes, and then you minimize. That is for minimizing. That is the zoom in, then that is the zoom out, and then that button is for shifting the chart from left to right. So as you can see, price is forming higher highs and higher lows. So we are reading the most recent structure. So that is the higher high, higher low. And we only mark the break of structures. So since we're in an uptrend, so price needs to break the highs. And then to mark your break of structures, you basically have to go to insert, and then click on objects, and then select the trend line, and then you drag it from that high, you drag it, you drop, and then you drag like that. That is how you mark your break of structure, because we are breaking this high to the upside. And it's very, very important that you mark your levels all the time. Don't mark levels with your eyes, mark levels on the chart always. So objects, you go to text, and then you click, and then you type in BOS for break of structures for short. Like that. That is how we mark the break of structures. Go to objects, insert, drop, and then drag the trend line. You mark your break of structure. Insert object text, and then you type in break of structure. Break of structure. We have another high there which has been broken. So we mark our break of structure. Break of structure. Set objects, trend line, that is a high that has been broken. We mark that as our break of structure. Break of structure. We have another high that has been broken there, which was the last break of structure to the upside before price started moving downwards. That is the break of structure. Like that. And then that is your higher high, that is your higher low, that is the high, that's the most recent high. And then we have some internal break of structures there. Internal meaning break of structures that are happening within this highest high, because that is our high, higher high, that's our higher low. So we have break of structures that are happening within this level. We call them internal break of structures. And then we have our break of structure because that high was broken. break of structure. Insert text, break of structure. Text, break of structure. Break of structure, and then you can go to the 4-hour time frame and be able to see the break of structures that we marked on the daily time frame. As you can see, higher high, higher low, broken, high, broken, higher high, higher low. The break of structures only mark the break of structures on the daily time frame. And then this was the last break of structure to the upside, and then we started having break of structures to the downside, lower low, lower high. You can see that is a downtrend. We are having break of structures to the downside, break of structure to the downside, break of structure, the downside, set objects, text, we have a break of structure like that. And then you can go to the 4-hour, and then you can see the break of structures, break of structure to the downside, because this low has been broken, lower low, lower high. The low has been broken. That means we are now trending downwards. And then you can go and click this chart, which is the VIX 101S. You go to the daily time frame, you move the grid, and then take volumes, and then you minimize to see where the market is trending. As you can see, the market is in a downtrend. Why? Because we are forming lower lows, lower high, lower low, lower high, lower low, lower high, lower low, lower high. So this is a downtrend. That means we are breaking structures to the downside. That is how you can tell the trend, because we are breaking structures to the downside. Break of structure, like for this one, we have the most recent low, and then we have that internal low. We always mark this low, which is there, that I like to call it the latest high, sorry, the latest low. There we have our break of structure, and then we have our break of structure there, and then we have there our break of structure. So that is how you can tell the direction in which the market is moving. You need to mark your break of structure to be able to know the direction in which the market is heading. And then I will do one last chart. Arranging market, Control U. Daily time frame, and then you minimize. So we have ourselves a ranging market. Ranging market. So for a ranging market, that is how it looks like. Price is ranging between two levels there, the resistance and the support. Resistance and the support. That is why it's advisable to wait for price to break out. But as you can see, this market has been ranging from 2021. So I will advise that you stay away from a ranging market, because as you can see, sometimes the price will move and then it does not get to your level of interest. As you can see, it came back from the resistance, came back to our support, and then for you put your take profit there, but the market will never get there, so it just retraces there and then it moves. So that's why it's very, very advisable to always trade trending markets. So trending markets that are trending upwards or downwards. And then for this market, you just have to wait for a breakout. But as you can see, this market has been basically pretty much has been ranging for almost 5 years, from 2021 to 2025. All right, traders, that is all for lesson 1. I hope you've gotten something out of the video. If you did, please leave a comment in the comment section, and then if you have any questions, drop a comment. I'll be able to attend to your questions. Thank you, traders. See you in the next video.